We have a little jingle here in LAR. It's called Use Less Leverage. Use less leverage when you trade the market. Use wider stops so you don't get picked off. Use less leverage or you might lose your head and your account will be dead. Use less leverage.
That was great, Dale. I think I'm back.
Well, good. I'm glad to have you back.
Yeah, I'm sorry about that. We have a slow connection, so I just turned off the camera for now.
Okay.
So we can
well,
just...
now at least we know you're handsome. So,
okay.
how old are you? How old are you, Jose?
I'm 32. I started in the business when I was 24.
Okay, and how did that happen?
Yeah, I was saying before we lost connection. It was a very young age for someone in Panama and from Latin America. There's little education when you go to school or even college about money, investments, those things, right? So I was looking for a job that at the time had a decent base salary, and to my surprise, it was a broker dealer in Panama.
Oh.
And yes, so we started. It was the interview process was quite interesting. It was about 2 weeks, more than 25 applicants, and at the end we have 2 guys that survived the process. I was one of them, and I started working for them as a junior broker. And then one of the things that you will find interesting.
What does that role? What kind of broker?
Junior broker.
Union?
Junior.
Junior, okay, junior, which means
Just
that
starting.
you went and you got coffee for your senior broker?
Sort of, more
broker,
or less.
And you made all the cold calls for the guy, right?
Exactly. I was doing the paperwork. I was the guy just putting the account application together and passing that information to compliance.
Okay, so what did you learn about slavery there?
Slavery. That I wanted. I wanted to be more. I wanted to be greater. Yeah. And I quickly realized that the admiration, I will say, and the one that people want to talk to is the trader, not the broker, not the analyst. They want to talk to the guy that is going to make them real money.
Okay.
And it was quite obvious for me.
Okay, so you saw that, and was your first focus on equity markets, being at a broker-dealer? How did you end up gravitating towards FX? And do you still live and trade from Panama? Because
yes.
I know. Okay.
I trade from Panama sometimes, Mexico City, Costa Rica. I travel a lot because of the nature of the business and the position. So I can trade anywhere I want, and mostly you have to be one-on-one with clients. The first encounter with FX, actually, I think you may recall back in 2000, I would say 7 and 8. That's when the Philadelphia Stock Exchange started offering the options on currencies. I don't know if you remember that.
Yeah, I do.
Yeah, and that was a boom as far as products for broker dealers, and we were at the time the only firm that were offering those. So it was interesting because we got a lot of new accounts and clients that were buying options like crazy, 1,000 options per hand, which for it's not a lot in a way, but you see a private client that suddenly calls you and say, buy me 1,000 options on the dollar yen.
You know what my belief is in options, right?
Yeah.
Options
and I like options.
Options are like relationships. 90% of them expire worthless. I'm sure you experienced it. If they weren't writing options and taking in premium along with their purchases, I'd say that most of them failed. Am I correct?
Yes, and it was interesting as well. Sometimes when you have a new product like that goes into the market, you also get new publishing companies with new newsletters. So some of them that were following newsletters had a little bit of success. I can recall a guy that he doubled his account in 2 months.
Mhm.
Sort of, those situations. It was a new product, so that was my first, encounter with FX, and I got interested. And then at the time, of course, we were very close to the 2008 09 crash. So I witnessed how the dollar yen went from, I think it was 113, 115, all the way down like a falling knife back to the lower band. So that was very interesting.
Okay, so a lot of people had to reinvent themselves and also recover from the financial crisis that started here in the U.S. How did it affect you, and how did it affect Panama?
Well, it affected Panama. Let's talk a little bit about the country. We got a lot of investments in real estate, and as you can imagine, that was the key aspect that caused most of the credit crunch, the credit crisis. It slowed down the country. We had a lot of projects from 2005, 2006 that they were just finished a year ago. So you can tell how bad it was affected. But we were lucky enough that we didn't receive that exodus of baby boomers from the U.S. and kind of slowed down. People had to rethink their retirement plans. But we do receive a lot of Venezuelans. So the situation in Venezuela at the same time that we have this crisis, it's getting very bad with Mr. Chavez, and they started coming, and somehow they created the support in a way for the real estate market. But it actually slowed down a lot. Myself, I took that time to travel. I went to Europe, Paris, to be more exact in information. I took time to reevaluate the business. Then I went to Mexico, stayed there for 6 months, and learned everything that I know so far about marketing. And I understood that we had a message, as you have with Large, and we need to put it out there, right? We need to, if we don't have the right platform, we need to create it. And that's what I did. When I came back to Panama, that was probably the end of 2009. I started giving interviews, writing articles about everything as far as investment goes. And slowly, can I introduce more the idea of FX trading as a valid asset class? Because in Panama and in many countries in Latin America, Forex, FX, has a negative connotation. Those several issues in the past, like anywhere, there are
a lot of scams. A lot of scams.
Yes.
Bucket shops they never even put on the trades.
Exactly. Pipe dreams. People come.
So it was an unregulated Wild West with a lot of barracudas and sharks.
You're correct. It was very still, although it's regulated, you still have a lot of a little bit of that thin line, gray line between the A book and the B book. How you still have players that they assure you that the B book, taking the risk from the clients, is a necessity. I have my doubts about that, but even with the regulation, we still have cases. So that's not going to change. But the most important that we're doing right now, and I thank you for the interview, because that gives us an opportunity to share with you more, and with all the guys, Alien, Rick, and the rest of the guys who we're doing in Panama and Latin America, is to we go to universities and we give seminars, basic seminars, technical analysis, and we try to lead people into different opportunities.
Okay, so I notice Guardian Trust FX looks to be a money manager, and I read what you sent me, and from your writings, what you talk about is you're a big believer in automated trading. Is that correct?
That is correct.
Okay, now what I've seen from you, and they've been great contributions on Twitter and this week here in the room, does not look like automated trading to me. It looks like discretionary trading. So how do you
Yes.
blend it? How do you blend it?
Yes, there's some information that I haven't shared yet. But yeah, the last 5 years, which it has been the work of my life, is to work with different EAs, algorithms, and to understand more. The big banks do that. Why not the retail traders? Most of the work you have seen with, well, you have seen on Twitter that I shared with Alien as well. It's part of what.
You love Alien, don't you? I think
Absolutely. Who doesn't?
you
Who doesn't love
brought his
Alien?
name up at least
Yeah.
5 times.
Yeah,
I
I
think
have
we
to
have
say he's a great guy and great
I
work.
think we have a bromance brewing here.
Ah!
What do you think?
Yeah, no,
Have you guys
sort of.
exchanged information? He's in Tunisia. I think you may also want to consider Ricardo. He's in Argentina.
I'm gonna send him a package. You
All right.
the end of the show. No, but you have what I like. One of the things I like, and this is you haven't asked me, but the fact is that I accepted the interview. Of course, I'm not gonna. No one is gonna say no to Dale Pinkert, but is because I like what I have seen is the sharing, the different views, and I am the kind of guy professional that I recognize what others do, positive things. Even if you make a mistake, we analyze and we keep moving. That's part of being traders, and that's part of being in FX. And also, I think that's very applicable to your daily life activities. So
Yeah.
the work you see on Twitter.
That's a very mature attitude for 32.
Yeah, thank
Because
you.
what really kills people, and it has hurt me in the past, is having an ego and thinking you know it all, and the only reason you want to follow other people is because they're the public, so you could fade them. So
Yeah, that happens a lot.
you know, we place a lot of importance, Jose, on the word of saying, oh, I'm independent. I'm independent. I'm an independent thinker. I'm an independent man. But you know what? We're all really dependent, and there's nothing wrong with having a dependency on people that support you and help you
Correct.
get better. Help you
Yes.
get better.
And
So
honestly, Dale, that's part of the human condition. The human condition, people then, we have been promoting over the last, we say, 30 years, the independent woman, the independent man. Of course, you got to be independent. As traders, we need to have character. We need to have an independent way to think and how we're doing things. But the reality is that we have been designed, as I said, the human condition, part of a society. We meant to be together, all together. The man with the woman, men with men, sort of the bromance, but very of the friendship of the fellow men.
even what we trade are pairs, right? We're not trading anything independently,
individually.
right?
No,
So,
exactly. That's part of the scenario that we're in. So that's why I mentioned our friend Ellen, but we also have Rick, Jax, all the other guys, and that's the value of being part of this free chat room and daily analysis. But as you were asking me, you see a lot of discretionary. Is because I haven't shared some of the work. You know, as part of the company, I share as much as I like to and I can with you guys. The automatization goes a little bit deep into different products that we have designed for wealth management firms in the U.S. and in Europe. So that also is coming. I'm going to share some of that with you as well. Today I only have some charts that I like to go over, things that happen in the week.
all right, thank you for that. You know how to screen share on this, right?
Yeah, let me go and try that right away. Let me see what I'm going to share. I think I have it my entire screen.
And everyone who's watching the interview, I'm looking at the chat page. If you have any questions, feel free to text them, and I'll relay them to Jose.
I think you should be able to see my screen now.
Not yet.
Yeah, let's see.
So you click the green thing, then it'll show you it. There you go. Okay, we got it.
You have it. So, like I said, we are teaching in Panama different seminars. My expectation always is to to make people understand, not only because we do it, but you have to think about it. You go to a bank, and this is pretty much my pitch to people about what we do. Okay, so you go to the bank offers you 2.5%, 3% for how many years? Meanwhile, you have a product, a leveraged product, okay, and you always have the song about using properly, you use proper leverage, and that's true. But people can easily, if they learn the how-to, the step-by-step, they can improve by 3-4 times their returns on savings and future retirements if they trade products like FX. And we help them, we guide them, we hold their hands and guide and walk them through everything that they need to know. Because one thing that we all have to be very clear about is that there's a risk. But if you keep your money for 10 years making 2-3%, and that's now, God forbid, interest rate can go lower or negative, it always, that's a valid scenario in the next few years, you end up with nothing, right? And because the buy and hold strategy doesn't work in equities as it used to, it may vary, depends on the quality of the stock. More and more people has to go back to the beginnings of the human society, the exchange. That's what we do, and you have to exchange the daily. Yeah, exactly. And you need to go to the daily exchange of currencies. Okay, so we have right now, you should be looking at the dollar yen for the last probably month. The last month it has been in a very sideways markets, all the way, the high probably of that range 121.30, all the way to the bottom that has been tested initially was somewhere around the 119, and then in 118.50 it was tested. Now, one of the things that we have to consider right now that caught my attention is that we're trading below the 50-day moving average on the weekly chart. And
the 50-week.
Yeah, exactly. And this is one of the things we teach our students and everyone that is interested in FX. There are only two things that you need to be successful in this business. You need common sense, and you need the capacity to observe. You need to watch what's happening, right? You might not have the opportunity to go to Harvard or MIT, and you don't have to. But if you really want an opportunity in this business, you need common sense to understand what is happening. And what we expect right now, as far as my work description with Guardian, is to prepare setups and guide clients and students into the best direction of the market. Right now, as I have been paying attention to the dollar yen, I expect more downside, and probably I will not question the opportunity for this pair to go to 116.81 at least. If things keep slowing down in China, I think you mentioned early during the FX room that next week you expect some risk off. I will say
I'm keying it on when I think the S&Ps are peaking.
Yes, and that's a very good.
I don't know the time, but I have price levels in mind.
That is correct.
And I actually think that we'll take out that flash crash low eventually. But maybe we make a move back to the top of the triangle again.
Exactly. That's what the reason why I have this triangle, because and I remember the first time that I was in Lars, you mentioned that where is the ascending triangle, Jose? Like, oh no.
Yeah, that's descending.
Yeah, this is the descending one, and of course, pretty simple. We show our students if it makes a move to the top side of the triangle, you will be selling. If it goes to the bottom of the triangle, as it is yesterday, it went all the way to 118.03. That was the low in the Japanese yen. You're looking to buy, and that was a critical support. You see, we are up probably more than 120 pips from yesterday's lows, and that was a very good trade for me. I kind of shared that on Twitter with everyone.
Maybe we rally into the BOJ, which is in a lot of central bank activity later in the month.
Correct, but also two things to consider on the Japanese yen, and aside from the technical picture, always we need to pay attention to the fundamentals, how things are moving. Bank of Japan last week and a half did nothing, sit tight in their easing policy. something to consider. Then you also have China, Moody's, the rating agency, just described how, well, share with everyone, and something that I don't think it's not expected in a way. It was very, very known, the fact that China is slowing down. They're not growing as fast as they do right now, as they used to be growing. And from the 7% growth, they're coming down to 6.8, 6.9. God forbid they go to 6.7. Things can get really ugly for everyone, as they are the #1 consumer right now in the world. The U.S. for quite some time hasn't been there as supporting the global economy, and those factors can play in the flight to security. I wouldn't call it anymore flight to security, but investors, big investors, they will just turn and start buying yen, and that will give us opportunity to go back to 116. I'd probably say that if we don't do that in October, beginning of November, we will be on a safe place, and the prices will still range within this triangle formation, and will bounce back, in a way, gravitate around the 50-week moving average on a weekly chart.
Okay.
Then, yeah, I also like to share my view on the euro-dollar. For some time now, after, I think it probably was on the last 4 weeks, when Draghi mentioned that he was not discounting the idea of another QE program in Europe, we have seen same scenario as we have seen on the dollar-yen. We have seen how prices have been gravitating around, in this case, on daily chart, the 50-day moving average. Very important is that although it has been just making lows, and people call right there, oh, it's going to parity. No, the euro-dollar is not going to parity right now, unless we have a super.
There are people that use all different time periods of moving averages. What made you settle on a 50?
I tell you that you mentioned at the beginning, if I had a mentor. I didn't have a mentor like now, like I talk to you and we exchange ideas and the rest of the guys. When I started, it was Larry Williams. I think you know the name, Larry Williams.
I know Larry.
Yeah, Larry, I've been one of my idols all my life, with Paul Tudor Jones and Jim Rogers. Same way, George Soros, people that I admire a lot for their character and the things that they do. But Larry had published a couple of books, and at the time when I was 24, a little information was in Spanish, so I had to get books from the U.S. through Amazon and get them into my PO box.
So Larry was a proponent of the 50-day.
Yeah, Larry was I think one of his first courses. Cracking the money code. That's where he explained that if you want to establish bullish or bearish, you take the daily chart, you pop up a 50-day moving average, and if his prices are trading above, this is very with the concept of price action, right? Prices trading above.
That's a pearl. That's a pearl that you're sharing. Okay.
Yeah. So. Prices go up. If prices are trading above the 50-day moving average, you're looking for buys. That's the scenario with less restrictions. And then if prices trade below the moving average, you're looking for sell. And that's pretty much what we're doing right now at Guardian. I have been proposing this for, I think when we were discussing the form of my triangle, I was saying ascending. Then you asked me where is the triangle. Then I think it was Ellen mentioned it was asymmetrical, symmetrical. Yeah. The formation sometimes, bad technical analysis, I want to take the chance to say this, bad technical analysis can lead you into very bad positions. But sometimes the way one trader draws the Fibonacci, there's only one way, for sure, the most accurate way, but sometimes we tend to see things different. And that's the beauty of this FX room.
Is there any name for the blue bar? I see the triangle. What's the other triangle above it that makes that's something that a harmonic pattern?
No, that's something you can say it's a harmonic, but this is something I'm playing with. This is part of my proprietary designs, things that I've been creating. for our students in Latin America. So what we do is I'm taking the duplication of, this is the high, remember when euro went in a spike to 117.13, so I take the high and then go to the low to take the count of how many pips. We're looking at 630 pips, and then I use that information to create the duplication of the triangle. Now this is very important because as we keep moving up, we cannot discount the opportunity that the euro can climb all the way back to 118. People will say that's crazy. In this business, nothing is crazy. Everything is possible. You just have to wait and see. So the triangle duplication that I have at least should have, I was working with it here. There's missing a couple pips here, but the size here will be equal to the fall from the high to the bottom here. Yeah. Now, what I'm looking here, I'm going to zoom this, 1 second, is the probability ranges, different scenarios that we have to trade. I shared on Twitter that I was looking a low to 113.33. It happened. It went all the way here. We can see. I got that right. I could miss it easily. It's not a big deal. But the most important is where we go from here. Actually, we can see on the daily chart we have a doji formation candlestick, very easy to recognize so far. Let's see how it closes later today.
I'd rather buy a break at the 50.
Correct. This is the thing that's very important. I'm not discounting, and no one should discount the fact that the euro dollar can go lower in the next week, and easily on a risk-off mode we can go and visit 112.65. Still, if prices were to come back to the low band of that range, 111, I still would say that I'm bullish euro dollar. The only thing that will change my perspective, I think this is very simple for everyone to recognize, it will be a open and close below this this support, 1102, and still it can be a false breakout. What I do believe, this is different scenarios that you have to play. There's not a single one that we can say, okay, this is exactly how things are going to happen. But these are the different plays that we see here, and the basic of all the seminars that we are teaching in Latin America, and also we have webinars, support and resistance with the notion of where the trend is. Right now the trend is bullish. It took some time for people to accept, for sure. It doesn't have that push that we see on of what we think the usual bullish or bearish trends, because of this different situation of the world economies. But we are in a bullish moment. We have bullish momentum here, and as you see the second triangle formation that I created, as we move, prices move into this triangle, and all information will be passed. That will be the pass, and this new triangle will be what we have to trade. And in this one, we will be looking for as low as 112.45, and then it can easily keep moving all the way up to 117 into the end of the year. Now, the last thing I want to share with everyone is that don't be fooled. Interest rates are going to stay low for a while. I know that the Fed Watch, which is one of the, I believe, CME products that you can track the public perception about interest rates. Yeah, in futures, exactly. It's saying that there's a probability for April 2016. Well, that's very far from here, so we have to reevaluate when the time comes. But as there's nothing else to say, the U.S. Data will support some rallies in the U.S. dollar, but in the present, or well, in this case, the absence of the tangible increase in hike rates, everything right now should be considered throwing away your dollars and buy some risk. There's no way around. And I believe that throwing dollars right now, selling dollars, will help to create more growth in commodities.
Yeah, it should also help the emerging market economies that got killed by a strong dollar.
Exactly.
And also Yellen didn't like it either. In fact, the high in the dollar index was posted on a day of a press conference when she brought up the strong dollar. So
that
actually, Yellen did put in the top of the dollar index right around 100.
Yeah, that's true.
I remember. So the
Yeah,
central
well,
banks really get in their way.
yeah, they have
Okay.
a plan, but remember, we tend to be on denial that we are just part of a testing process. Uh, I think you will see my screen. I would like to share a little bit of what we do in our training room and classes. Do you see the chart for the Australian
Yeah,
dollar?
got it.
Yeah, so pretty much in the morning we're kind of changing that to a 24/6 training room, and just like yours, it's different for it's more premium. But I like to share more of the work that we do
Nothing
there.
will be like mine.
Yeah, yeah, yours
I mean
one of the best.
ours. I mean
Yeah,
ours.
yeah, exactly.
Unless you
So
clone me and take my other half down to Panama.
yeah, that would be great. That will be, you will like Panama. You have to come down and visit. Everyone
Adam
should.
Button loved it. I interviewed Adam. He loved it down there.
Yeah, it's a great country, very sunny. So just share a little bit more of what we do. The more in-depth work, we establish different support and resistance level with colors. It's very visual, so easy to understand. We define, for example, right now, we were short yesterday, Australian dollar. Not because we expect that the dollar will get stronger. That's not the case. It's just for different technical aspects. First, you will see that we're taking a look here at the picture on the daily chart. There's a huge resistance, and this resistance, the blue line up here.
Is that the 50?
No, that's just a trend line, the blue
Oh,
one
I see.
here,
Okay.
the big one. But that one, it doesn't look quite well in the picture because
I see.
what I'm sharing right now. But this is the bearish trend line that comes all the way from 78 cents, and it
Okay.
goes all the way down. So you see how the Australian dollar is actually facing the green one here. This is the moving average, the 100 days. It's facing challenge on the upside. So its upside is limited right now because of the very strong bearish trend, and also it's challenging the 100-day moving average. So for us right now, our advice, suggestions to students and clients is, okay, you're looking to resistance. So it's a very bad idea to be a buyer. You want to be a seller. And in that position,
Why is the 50-day missing and replaced with the 100 on this chart?
that's a little bit of one of our instructors, Ross Mullins. He goes more with the 100-day. That's part of his strategy. I go more with the 50. It just varies from structure, but the main concept is support resistance, how we trade. Now, what you see at the bottom is one of our proprietary indicators, the Forex Black Book, now labeled as renamed in a way to the Prodigy Trader program. And of course, when it's green, we're looking to buy. When it's red, we're looking to sell. It has been green for a few weeks now. So what we explain here, basically, if you're in the presence of the resistance, you're looking to sell. You don't have to take all the trades. This is very important and something that we explain part of the psychology of trading.
Red is sell, green is buy, and purple is what?
Purple is the resistance. Once you're on the chart, these levels.
It's
exactly,
support and resistance. The bottom
correct.
Support.
Correct. Here at the top, you will see the resistance, and here at the bottom, it works as support. Now we know that there's some resistance. Eventually, they become support. That's the mechanics of the markets. So at this point, of course, when prices are trading close to these levels, the purple shade area, we're calling for sells. And the target, of course, will be the green area, which is the support, and then you will be to place your stop above the resistance levels. One of the other things that we share a lot, and I do believe a lot in this, is risk management. You have to protect your positions. So it's a common practice in our classes that once you are 20 pips into profits, you're moving into break-even. Now, I explain a lot of this break-even will depend on the things you want to achieve. Sometimes I do spread plus 2, spread plus 3. I always try to cover a little bit more than the spread that you're trading with. So from broker to broker, it will depend on the spread you have on your currency pair, which is not really high these days. And this is at least the view right now is pretty basic. We buy support, sell resistance, and always paying attention to the long-term bearish trend here. And the last one, if we have time, we have one more chart before we discuss a little bit more. The view on the pound dollar, same way. The bottom of the indicator, the Forex Black Book Prodigy Trader indicator, has been green for some time, beginning of the month, but we are facing the challenge of the red here. This is the long-term bearish trend here, and right now prices we're facing at 154.88. That was probably the high last night. You're facing resistance. There's the 100-day moving average in conjunction working with a bearish long-term trend and rejecting prices to the upside. What to do here? Well, of course, if you're close to 155.00, you don't want to be a buyer unless there's a breakout, and then still you have the opportunity to be caught by a false breakout. So you're looking to be a seller, your stop loss above the resistance, you are targeting the yellow shaded area. Where is the support located? 154.26. And of course, going back to the basic concept, a open and close below this support will open the opportunity to go to the next support area, the purple shaded area, and you're looking for 153.63 to 153.21. Pretty basic concept, support, resistance. And that's how we help our students to step by step. I'm not a big fan of having a screen full of charts, indicators, oscillators. I use them once in a while. I'll show you here. I use RSI, MACD, stochastics, of course, Bollinger Bands. But once in a while, I like to be very basic, and I believe that simple works.
I tell you, it was a very great interview. So why don't you take the remaining minute or so to show people where they could find you when you're not in LAR, and perhaps we have some Latin American viewers that see us on our YouTube channel that may be interested in hooking up with you, Jose. So if you want to show your website or anything else right now, this is your commercial.
Absolutely. Thank you for that. Appreciate it. Well, on daily basis, at any time when they like to have an idea, besides always tune up to LAR with you guys and all the great contributors that we have, they can visit us. We are on Twitter. The address on Twitter, I will try to open the site, the Twitter site. Guardian Trust FX, that would be our Twitter for the company as well. If they like, I'm going to type it in. They can follow me. I'm always sharing interesting views. That would be at José Ricaurte J. That might be my personal, but as well professional Twitter.
Is that your house above you, or your dream house?
Oh, that's the dream house.
Okay. All right. It's good to have a dream,
and
my friend.
Website, yeah, and our website, they can find us, Guardian Trust FX. In the next few weeks, we're going to have our new funds, growth fund, that is based on the strategies that I have shared with you guys. GuardianTrustFX.com. Coming soon.
What's the minimum investment for your funds?
Well, for the growth fund, it depends on the time horizon that clients may or may not have. We're looking starting at 25,000 for the growth fund, but we do connect with clients via phone and analyze their situation. The last thing I want is not to create the right expectation of what we do. Our fund has been growing for last year. Do you mind if I share that with
No,
you?
I don't mind.
Okay. Let me share the stats of the fund. We took some time because last year, I can share with you that I was trading the 3 sessions. I was trading London, Asia, and New York, and I was almost burned. We have a very aggressive fund that we were managing $2 million. It consumed me a lot last year. So I wasn't very active on social media, and I wasn't doing one of the things I like, which is share and add value. Because I really believe let me know. Maybe you agree with me.
We see it. You're up 112% from January, the beginning of 2015. No, the beginning of 2014. Yeah.
Yeah,
Nice.
let me share with you this. Yeah, this has been, and this is very the approach that we follow, that we teach students in our courses. Support and resistance. That's all you need. And this is the, you can see the different returns, very stable, nothing fancy, nothing crazy, enough to scare people from
I see.
2014.
My question when I raise money for money managers is, you know, everyone's great when things are going okay. What I want to know as an investor is what was your biggest drawdown?
Yes, and I agree with you 100%. Biggest drawdown at right now, I will say 24%, which is
Okay.
somehow crosses the threshold, which is 20, what most funds accept.
Okay.
However, over the last year, if we go over the stats, you will see how we have been reducing it a lot. And the highest drawdown so far was a 19% in February
Yeah.
of this year. And I agree 100% with you. A lot of people, and this is funny because, and this is one of the things I like a lot, my FX book as one of the third-party verification tools that is out there. Still today, year 2015, you get a lot of people visiting or offering you funds or opportunities of trading with PDF files. They come and say, hey, look, this is what we have been achieving, but how can you verify this? Now, even though we have been successful with our strategy, again, like you said, everyone is happy when they're making money. The most important is we will see your true colors when you're not doing so well, and that's what I like. How you recognize yourself as a trader when you are facing challenges,
Adversity.
for
It's
adversity
what
in
you
front
do
of you.
during periods of adversity.
Yes, that's key, and that's the most
Okay.
important.
You don't know if you have faith till you need it.
Exactly. One thing that we talk a lot and also explain to traders and institutional investors that if you recall the first 6 months of 2014, people were complaining the lack of volatility, no one was making money, and everyone was complaining. Well, you were complaining if you were only trading the day-to-day, euro dollar, pound dollar, but if you were paying attention to crosses, that's also something that we do. We trade crosses, euro Canadian, euro Australian, pound New Zealand, pound Australian, pound Canadian. You had the opportunity to make some money as well with the Yen crosses, Euro Japanese Yen, and the one that is the selection for high volatility, pound Japanese Yen. Because we trade those as well, we have been able to generate a little bit more returns over the last 2 years. Now, of course, the euro, the pound, they're back into the volatility scenario where you see, just like this week, it has been going from 113.88 something back to 113.50, and it keeps moving. So that's very interesting. So we always look for opportunities, and part of that, hopefully, I will be able to share that in a couple of weeks with you, more of the automated strategies that we use, how we use them, and how we explain people the value of using those automated strategies.
Yeah, it certainly takes all the emotion out of it.
Absolutely, no emotions in this business, and actually, again, it applies to your day-to-day. You cannot be crying for what happened yesterday. It doesn't work like that. It just simply doesn't work. You will have losses. Be prepared. You will have losses. The question is how you manage those losses, okay, compared to your winning trades. And that's pretty much about it, how we are doing things. And when we're looking into 2016, it's going to be a wild year. I guarantee you that. That I guarantee you is going to be a year that things will be out of proportion, because we'll be challenged by, I think we all expect a deflation scenario that we're not expecting. Inflation is far, far away from us, and that will affect businesses. And I said it last year, said it, I will say it again, and I always keep thinking, if you think FX is 5 trillion now, expect to see what will be the volume in 5 years from now. It will keep growing at exponential rates, and we'll have more people that will be pushed to take some of their savings. They will be pushed to learn more about FX trading. Not only FX, you will have also CFDs. Leveraged products will be the answer to a lot of the problems we have, because it's impossible to ask someone to just allocate $50,000, $100,000 right away into FX trading. is a leverage product. So you will say you take 10, 20, a portion of your assets, and with that portion, you will start trading and look for better yields. That's the only way.
Okay, Jose, thank you very much for your time today and your shares on Twitter and your sharing in LAR. And people can follow Jose at Guardian Trust FX and his personal handle, and as well as fxguardian.com. Have a great weekend, Jose. Thank you
Dale.
Thank you for your presentation today.
Thank you for the opportunity. I thank you guys, and I see you next Monday, Lars.
Okay, buddy. Have a great weekend. Good hunting.
You too. And, take care.
Thank you, everyone. Everyone, thank Juan for his Jose for his presentation, please.